In this video, we're going to be talking about how to protect yourself in this volatile market, basically an insurance policy. Stay tuned. Hello, this is Mehdi at Choosing Options. Today, we're going to be talking about how to minimize your risk in your portfolio. If you have a lot of short positions in your portfolio and you want to minimize your risk, the best way of doing it is to buy straddles. I'm talking about straddles, at the money straddles. And also you want to make sure that they're running at bare minimum as far as the volatility, implied volatility goes. So I scanned the market. Here's a list of what I got. And I sorted them in the opposite of the when I want to sell. So I go with the lowest at the top of the list, and the highest here would be about 36 percentile of its implied volatility, and the lowest would be close to zero, which is SLM. Okay, the next thing I do is I'll take the stocks from the top to bottom. Let's say the first guy is SLM. I'll figure out what the at the money straddle is for SLM. I've done it in the next page. Let's see. 91 cents at the money straddle for SLM. Okay. Let me get out of this page. All right. Now, 91 cents. Here's a spreadsheet that I ran for 2 years. I think it's overkilling it, but I went 2 years. This is a Google Finance. Let's see. Yeah, 2 years, 73 days, 730 days. We could go as far as maybe 365, but maybe I overkilled it. All right. So I pretty much, this gives me the data for 2 years. This is a high, and every day this column is the low, and I punch in the symbol here, SLM. It will tell me basically what I've done here in the next column. It says that for the last year, the highest monthly move for SLM was about $2.79, and the lowest range was about 67. So 91. I'll put it 91 here. It shows one time 91, 91, 2, 3. So this shows for the last 16 months or a year and a quarter. These are 16 rows. The stock has only one time hasn't covered 91 cents. One time, which is right here. All the rest of the times, it's gone either up or down more than 91 cents. So this is, I prefer to have this number 0. I want it to have every single month for the past year and a half, year and a quarter, has the monthly 30-day monthly straddle. I put this aside. If I don't find anything, then I'll trade it. But like I mentioned, I want this number to be 0. I want every month to be higher than what it is. That is, I want to make sure that I'm getting a bargain. Let's see. Then I'll go to the next one. Okay. Now, AUY it's only $2, so it's not worth it. The next one is $3. STI, here's the next guy. STI, let's see what's the straddle for STI. STI is trading about $4.15. All right, $4.15. Then I go to next page, punch it in, STI. $4.15. I don't like this one because past year and a quarter, 4 times it hasn't gone past through $4. Let's see, 1, 2, 3. Yeah. So this one is a no-go. I'll go to the next one. All right. RAD. It's only $1. No good. HBAN. What's the straddle on this guy? $1.09. HBAN. And I come here. HBAN, $1.09. HBAN, $1.09. Well, this one is not good either. See, 109. Yeah, 4 times he hasn't passed through it. Okay, let's go to next one. All right. Did not get the gold. 327. 327. And UGT. 327. Oh, this is pretty good. Let's see. 327. The minimum that gold has gone has been $4.36. And right now the straddle, the 30-day straddle, you pay $3.27. So every single month during past 16 months, if you look, every single month it's gone over the $3, $3.20. So this is a good buy. So this is what I would probably trade. But keep in mind though, like I mentioned in my first video, for every $100 that I sell, I buy maybe 10, 20, at the most 30. It's all up to you whether you want to go even higher or not. It's what's your risk appetite. I mean, for me, 10, 20% is good enough to give me enough cushion to get out of it if the market crashes or something. So this is one good candidate. Let's go. It's probably the next one is good too. Let's see. GDX, that's also gold. $1.97. GDX. $1.97. Oh, I'm surprised. It's did I punch it in right? Yeah. Well, it's the performance is not as good as the other guy. So no, I probably wouldn't do this one either. Let's see, 130, 130, 170. Yeah, the Nuggets is much better. Okay, let's see. Let's go to the next one. NLY. NLY. What was the deal? NLY. Oh, wait a minute. GDX was only 97. I made a mistake. Let me go back and test it again. Well, let's just do this one for now. 33 cents. 33 cents. Okay, this one is pretty good too. Right now, if you buy it at the money straddle, that is 33 cents. It's gone at the bare minimum 33 and a half. Oh, it's covered it. At the very lowest, it's covered it. So you got a shot on this one too. It's a good one. Okay, GDX. GDX 97. There we go. Yeah, GDX is our option too. So the last three, let's see, is three. All right, way to go. How about this guy? AABA. AABA. Okay. Let me go back. $3.87 right here. 387. $3.80. No, no good. The farther down the list we go, the worse it becomes because let me show you why I'm saying that. Okay. See right here, 15% of its own range. So the higher we go, the chances are you have to pay more because it's at higher percentage of its own volatility. So the chances are pretty good that none of these are any good. We can run the numbers. I mean, you can do it yourself. So let me give you the equation for that guy again. For the high, where did it go? Here. Oh, here we go. You can copy this, or you can Google it. It'll tell you how to run it. J1 is this cell. Whatever symbol I put here, that's where it's going to compute, for all these rows. And for this one, which is a low, this is a high. See, it says high. Low says low. J1 is this cell right here. So whatever cell you pick, that's the cell that you want to type in here. And it will run it. It gives you all the data. It takes 2 seconds, less than that. And for this, okay, first I came here, E3. That's the equation for per month, which is 20 trading days. 23. You just count them. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 1, 2, 4, 5, 6, 7, 8, 9, 10. That's 1 month of trading. So within that range, it's saying maximum of this column minus minimum of this column will give you the range of high and low. You do that for every 20 days. Do it here, 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 all the way down. Make sure there's a 20-day gap between them. And then take the results over here. I just say H equal H3. Okay. This number is equals this. This number equals this number equals this guy all the way down. And then this would be the result of the 16 months. And over here, I do the min max. See the range between between here. Well, over here it says H. Okay, here, this is the column. Maximum to minimum of this range would be here. And the minimum of this column, whatever it is here. Here is more visual, you can see better. This is just a counter. Count if K24 is this, whatever I put in here. And this, the one does the opposite. Count if this range. You know, you can just copy this and put it in your own spreadsheet and get the results. So at the conclusion, I'm not saying to trade this, but I'm just saying how I do it. So every day you can do it yourself. Every time you think your deltas and gammas are getting out of range, just do a couple of these to put them in line. All right, shoot me a email or like this video, or however you want to do it. Let me know if you have any questions. See you at the next video. Bye-bye. By the way, guys, before I go, I just realized something. Look at this. NLY on the historical volatility column. One month is lower than 2 weeks, and 2 weeks is lower than 1 week. So this column is 1. So that means the historical volatility is going up. See, 8 to 10 to 12 is crimping up. So this is a good trade overall, besides the price range movement and all. The implied volatility is also going up. So that's another pointer for this NLY. Just wanted to add this to the end of the video so you get an idea. Because when we sell, we go the exact reverse. We want the slope to be basically going down. We should concentrate on this column. But now we're doing it on this one because we're doing exactly everything in reverse, NLY. Anyways, that I just wanted to add this so to just explain things a little bit more. Thank you. See you next time.